Welcome to Money First CEO, the podcast for business owners ready to run their business like a boss and make their money work smarter, not harder. I'm Harmon Johnston, bookkeeper, profit first professional, business coach, and mum of two from Sydney, Australia. I've built a thriving business by mastering money habits and systems that create real freedom. This show will help you take control of your finances so you can build a business and life that truly works for you. Every episode delivers one powerful takeaway you can action right away for more clarity, confidence, and cash. And from time to time, I'll be joined by special guests, fellow entrepreneurs, experts, and real business owners, sharing their money wins, lessons, and insights to inspire your next move. Because when you put money first, you unlock the options and freedom you deserve. So hit follow, grab your coffee, and let's dive in. Hey there, and welcome back to the Money First CEO, where we put money first and the rest will follow. I'm your host, Harmon Johnston, and today's episode is a message most business owners don't hear soon enough. Your business is not your bank account. Let me say it again because it's that important. Your business is not your personal ATM. If you've ever logged into your business bank account and thought, sweet, there's money in there. Yes, I can pay myself, buy some groceries, cover a personal bill. Well, you're not alone. I used to do that too and see it with our clients all the time still. But here's a hard truth. That behavior will keep you broke and stressed, even if your business is doing well, even if you are good with numbers and managing your cash. In this episode, I'll share how I used to treat my business like a piggy bank, the exact system I use now to keep my finances clean, and how you can stop the chaos and start creating clarity. So let's get into it. So we'll start off with the chaos of mixing business and personal. Before I implemented Profit First, and even before I understood how to treat my business like a real business, here's what things look like. I had one bank account, client payments would hit that account, and I'd use it for everything. Subscriptions, business tools, petrol, coffee with clients, and even sometimes an odd grocery shop. And I thought I was doing okay because I wasn't in debt. I never had any business loan. But the truth, I had no idea how much the business was actually making. Yes, I could run the P&L, but that profit didn't reflect to what was in the bank account. I couldn't predict taxes. I wasn't building savings. And worst of all, I wasn't paying myself consistently. And honestly, this is what I see with clients all the time. And a lot of the times they're like, I'm working so hard and I'm just not being able to pay myself. But then when I look at the transactions, their personal mobile phones are through the company, their car expenses are paid through their company, and sometimes even their personal travel is paid through the company. They use their business bank account like a personal wallet, tapping it in for groceries, home bills, random transfers to themselves because the money's just sitting there. So I might as well use it from my business bank account and leave my personal bank account, sitting there and hopefully earn more interest personally. But what does that cause? First of all, messy bookkeeping. Your bookkeeper is not a fan of that because it doesn't make our job any easier. You'll usually end up having lots of questions from your bookkeeper because we don't know what's business, what's personal, especially when you purchase things from Officeworks or Bunnings or Flower Power and you just wonder if it's a plant for the office or a plant for home. So we need to clarify it, which is why, we need to ask the client. But if they use the business bank account for business expenses and a personal bank account for personal expenses, we wouldn't need to ask those questions. Also, extra questions for the accountant. There's a big entertainment bill. Was that for clients or was that a personal expense? Because it's really close to Christmas. And confusion over what's business versus personal. And worst of all, a huge director's loan account. They didn't expect a year end if they're a company. So a lot of the clients or, if I work with their accountant and they're making personal transactions, ideally you should transfer that money back into the business because the business money is not your money. The business is a separate legal entity and they have their own assets and liabilities and the money in the bank belongs to the business. So when you use that money for a personal purpose, it's a loan from the business and you need to pay it back. If you don't pay it back, then somehow that money needs to be accounted for. Either it's not a business expense, so it can't go in the profit and loss. So it has to go on the balance sheet and it's not a loan. I mean, it is a loan. It can be a director's loan, or it can go as a Division 7A loan, which no one wants. So, it has to go somewhere. And most of the times it ends up going to the director's loan account, which is a painful tax surprise come a year end, and a pattern that keeps you building real wealth throughout your business, and something you don't know or you don't understand until it's too late. So what changed everything for me? The shift happened when I heard this simple idea. Your business should pay you, not blend into your personal life. And that was the start of me separating personal from business. And let me tell you, that one shift gave me more peace than any revenue goal ever has. And here's what I did, and I still do that today. Obviously, I implemented profit first. I started with the 5 core bank accounts: income, profit, owner's pay, tax, and OPEX. No more mixing, no more mental math. No more, I think that 700 is mine. And I've paid myself like an employee. So every fortnight when I pay my team, I transfer the same money or same amount of money from the owner's pay into my personal bank account. Like clockwork. That's my salary. That's my compensation for putting in the hours that I do in my business. And it's automated, so I don't even have to think about it. It's not emotional. It's just part of the system. All personal expenses, for me, come out of my personal expenses. So I don't put any groceries or any personal expenses through the business. And if sometimes by mistake, if I do pay a business bank account, like Amazon or something from the business, then either I transfer it or I put it to my loan account. So at the end of the year, it gets accounted for. I do a big transfer at the end of the year and clear that balance. And I'll talk about how I structure our personal bank accounts in another episode, because that's another whole. And I have built discipline with transfers. If I want to buy something, personal or business, it has to come from the right account. No more just grabbing from business to fill a personal gap. That ended the financial roller coaster. And if I do pay for like a personal expense through the business for whatever reason, I don't, but if I ever did, it would be coming out of my owner's pay account, not the business operating expenses. So what is the CEO standard? Here's the deal. When you treat your business like a real business, it starts to pay you like one. That means there's clear boundaries between your money and the business's money, consistent paydays, not panic withdrawals, and confidence around taxes. An actual measurable profit, not just income. You can see the money in the profit account. And this is about stepping into the CEO mindset. You're not an employee of your business hoping to get lucky. You're not a starving artist hoping the numbers work out. You are the owner, and the owner gets paid on purpose. And what changes when you separate? Here's what changed the moment I stopped treating my business like a bank account, and what I see change for clients too. They start seeing real profit. They pay themselves consistently. Their books are clean. No messy personal expenses to sort through. Their accountant isn't chasing them for what was that Amazon charge. And there are no more surprise director's loan at year end. And maybe most importantly, they stop feeling like they're constantly behind because they actually know where their money's going. So when you separate your finances, you don't just get more organized, you become more powerful. You go from reactive to intentional, from guessing to growing. So your one move this week, separate your finances. Only pay yourself from the owner's pay account. Even if it's just $50 to start, create the rhythm. The goal is clarity, and clarity always leads to confidence. So the big takeaway, here's what I want you to remember. Your business is not your bank account. It's a vehicle, a system, a wealth builder, but only if you treat it with structure. You'll work too hard to be guessing, so give every dollar a home and make sure your business serves you, not the other way around, and open a separate bank account or separate your finances. Thanks for listening to the Money First CEO, where we put money first and the rest will follow. If this episode gave you clarity or a that's me moment, send it to a friend who needs to hear it too. Until next time, keep your money clear, your mindset sharp, and your boundaries strong. Thanks for hanging out with me on Money First CEO. If you got value from this episode, hit subscribe, drop a 5-star review, and share it with someone who's building their business too. All the goodies are in the show notes, and you can find me on socials for more tips and tools to help you. Until next time, keep putting money first and the rest will follow.